Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is November 15th, 2022. This is the morning Forex report. We're going to take a look at some of the major currency pairs, look at their bias defining levels, their risk defining levels, and see what happened and what we might expect in trading here today. So let's get started. We just had PPI data come out, came in weaker than expectations, and we saw the dollar move sharply to the downside. But we are seeing some clawback and the retracement back to the upside, I guess, in the dollar, although stocks remain higher with the Dow Industrial Average up around 350 points. The Nasdaq index is up about 320 points, and the S&P index is up around 71 points as I speak. But let's take a look at the euro versus US dollar here, and I have it on the daily chart here. Why? Because the price moved above the 200-day moving average in trading here today. We just reached a new high of 1.04806. That's the new high. That's the highest level since around this time right here, which is in the end of June 2022. So it wasn't that long ago that we were at these levels again in the euro versus US dollar. But the more important thing, I guess, is that we're above the 200-day moving average. We're trying to stay above that level, and you can see it ticking above and below, or down to that level, and finding a little bit of support buying against it. What's the significance of the 200-day moving average? Well, I'm going to take you back in time, back in time, and you have to go all the way back to this day right here, where the market just closed just above the 200-day moving average. That was near the 119.91 level, and the date was back on June 16th. 2022. So it's been a long time since the price traded above the 200-day moving average. Admittedly, it is about 15 big figures, or 1,500 pips lower than it was back in that time in June, which makes it an easier hurdle to get to and through. But nevertheless, it is a technical hurdle because markets have changed, the fundamentals have changed, so on and so forth. And getting above the 200-day moving average is a positive bullish shift for the euro versus US dollar. Getting above the 100-day moving average last week was a positive shift, and also above these swing areas through here, 38.2, this swing area through here, etc. All those are positive bullish moves, and today's break is in that line. If we cannot hold above the 200-day moving average, that might be a problem. However, we could see a rotation back toward this level right here. This level had a number of swing levels that come into play. In particular, this low right here, this low right here, this low right here, this low right here in 3 consecutive months. And then we had these highs right here before we came up to that level in trading this week and found willing sellers against that level. I guess that was trading on Friday, and again yesterday found sellers against the swing area right here. So this area right here is going to be a key level on the downside as well. As long as the price can remain above that level, it's more bullish. Better level to stay above would be the 200-day moving average, and as you can see, the market is trying to stay above that level. By the way, that 200-day moving average comes in at 104.28. The current price is trading at 104.40. So a little bit of room between it and the current price, but we'll see if the market can hold up and keep that bullish bias going. Let's take a look at the dollar versus yen in this currency pair. What do we see here? Well, what I spy is the inability to get above the 100-day moving average yesterday. That's the blue line in this chart right here. And again, today, the price moved up to the 100-day moving average. We found sellers pushing the price back to the downside. The move to the downside, the low here off the PPI data, came in at the 137.65 level. That is still short of the 38.2% retracement of the move up from the 2022 low. That's way back here in January to the high that we saw last month. And so there is some room to run. We're currently trading at 138.31. These are big, it doesn't look like much, but it's, a pretty decent move. This over 100 pips from the 38.2 to the current price right here in just this small area. So lots of room to roam in the dollar versus yen. But if the price is going to show some further weakness after the sharp trend move higher in 2022. Getting below the 38.2% retracement is going to be one of those barometers that needs to happen. Getting below the 100-day moving average is one of those barometers that needs to happen too, and indeed it has already. But this level right through here, the 38.2% retracement, is going to be another key level that shows that the sellers are taking more control. And then we'll start to look at work at the 200-day moving average and the 50% retracement. It just goes in succession, folks. Here, there's like exits on the highway. Got to get to and through them to continue to move in that direction. That's what the dollar versus yen is trying to do. And so far, staying below the 100-day moving average is keeping that idea in play. Let's take a quick look at the hourly chart. And on the hourly chart, you can see the resistance against the 100-day moving average both yesterday and today. And the chart moved to the downside here today, taking the price below the low levels and increasing the bearish bias. Maybe a closer risk level or a close risk level today would be the low price that we saw in trading yesterday or on Friday, I guess. That level came in at the 138.45 level. So keep that level in mind on the top side. If we move back above that level, will be a little bit of disappointment for the sellers. Okay, let's take a look at the sterling versus US dollar next. And this currency pair continues its move to the upside. And what we see from a technical perspective on the daily chart, again, we're looking, well, not again, but we're looking at the daily charts because we are making bigger moves here and trending in an upward direction. And those moves are taking the price above key technical levels on the daily chart that we haven't seen in a while, like the 100-day moving average. The price moved above the 100-day moving average on Friday's trade and stayed above that level at the lows here. Actually, traded above on Thursday, and we stayed above the level on Friday. And yesterday we had sort of an inside date of Friday's trade, and today we're moving back to the upside. But the 100-day moving average, that has not been broken since way back here. Back in the month of February of 2022. So earlier this year, it's been a long while since the price moved above the 100-day moving average, and now we're getting above that level. I've been earmarking the 50% retracement of the move down from the high that we saw in January to the low that we saw in the month of September as a key target level. Just a few days ago, I was saying how, it's not out of the question that we could get to the 50% retracement level. And lo and behold, here we are pushing closer and closer to that level. The high price today off the PPI data came in at 120.283, just about 20 pips away from that 50% retracement level. So it might be close enough for government work here, but clearly there's going to be or not clearly, but there's probably going to be some cause for pause against that 50% retracement level, and indeed we found it here in the early trading. This little swing area right here, around the 119.57. I think this is like 38. Can't be too sure, but somewhere around that level. Around the 38 level. We have a swing low right here, swing highs right here, swing high right here before rotating to the downside. It got a little messy through here, of course, but nevertheless, this area right here was a target, and that's where we're kind of sitting, trying to hold support for another move up toward the 50% retracement. 50% retracement is going to was a key target. I'm not surprised that we saw some sellers against that level. I've been earmarking it as a target going forward. Finally, let's take a look at the dollar versus Canada before we end this report up. And what's important here on the dollar versus Canada is that blue line. That blue line represents the 100-day moving average, and it's been 3 days in a row that the price has come down and tested the 100-day moving average. Also, this swing area through here, swing highs, swing highs, swing highs, break, swing low right here, boom, boom. So you can see the importance of that swing area through there. Finally, the 38.2% retracement, 132.24. So you can earmark 132.07 to 132.24 with the actually the 100-day moving average is just a little bit above that level, so maybe it's like 38 or something like that. Currently trading 132.74 as the market finds support against that cluster of support down below and holds that level. So again, these are things that you as a trader have to look for those levels where there's a cluster where lots of traders, buyers and sellers come together, and there's a decision made at those levels. Either you're going to go lower or you're going to go higher. And in this case, we're seeing a little bit of bounce off the lows here in the dollar versus Canada, despite the weaker CPI. So the markets are probably in motion, are in motion here. I see the euro versus US dollar is getting closer and closer to that 200-day moving average. Seeing a little movement in there. The Dow Industrial Average still remains up about 360 points. The S&P up around 68 points. By the way, the Nasdaq index, which is up strongly here today, has its 100-day moving average. Write this down at 11517.79. If we do get some sort of follow-through big buying here in the Nasdaq, remember that level 11517.79. It's 100-day moving average in the Nasdaq index. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.